you to everybody who showed up today for this space. I'm sure the numbers are only going to grow from here, as they usually do. As usual, it's your classic host, Hunter, over here from Off-Chain Labs, building Arbitrum. And while the space is mainly for bond protocol, they happen to actually bring on a ton of classic Arbitrum native guests that, if you've been in the ecosystem for a while, you're very familiar with. So it should be a very, very interesting space. First kind of space that I've hosted like this personally, so it should be fun. How's everything going, guys? We doing good?
Awesome. Ready for it.
Everything's going great on our end. Just organizing the awesome crew that you have here. So big shout out and thanks to all the partners joining us, but then also Off-Chain Labs Arbitrum for hosting here.
We're the survivors, everyone. We should be proud.
Jeez, yeah, no, definitely shouts to Bond to the Bond team for organizing this. But we're definitely here today, mainly to discuss obviously Bond Protocol, one of the newest DeFi projects launching on Arbitrum. Main thing that their initial pretty much launch cohort, I should say, includes L2 DAO, GMX, Prepo, Y2K, Vesta, and I think a couple of others that'll also be joining. But obviously, main thing here is that we're really excited to obviously have you guys here, just here today talking with the rest of us. And by the way, obviously, Dopex, shout out to Saitama for being the first one on here. Classic. But just to give a very, very quick overview of Bond before I let you guys get into it. For those who aren't familiar, they essentially provide value bonds to DAOs that live on Arbitrum and their treasuries. But from a high level, they really, I guess you could say, empower crypto treasuries to secure protocol and liquidity, diversify the treasury, raise capital, and secure strategic assets, whatever those may be. But the main point really here is to help, obviously, the current projects that live on Arbitrum in any of those endeavors there, but also assisting other projects in migrating whatever capital they raise, liquidity and treasury management strategies to Arbitrum from any other chains that those protocols currently exist on. So really just obviously here as a great ecosystem partner and here to really essentially just build the Arbitrum ecosystem as much as possible, which obviously is, while obviously we build the Arbitrum, the protocol, you guys really are the community. So I'll always definitely give my props to you guys. Even though I'm the community manager, you guys do most of the work. You guys just make me look good, actually. So I really appreciate it. that's all of you guys on the space, by the way. But yeah, so that being said, please, before we actually get into everything, I'd love if you guys could maybe give quick intros. Nothing crazy since we do have a lot of people here. Starting with the Bond Protocol team. If you want Big Fish, you can go first.
Sure thing. So great intro there. Bond Protocol, effectively what we offer is on-chain bonds as a service for capital raises for protocols of any stage during any cycle. As mentioned, a lot of the common use cases are for protocol and liquidity, treasury diversification, or strategic asset acquisition. But through launching permissionless bond marketplaces, our partners can really intake any ERC20 asset that ties into token economics or treasury diversification initiatives in return for paying out a payout asset in return to the community members who bond, who will be getting those assets at a discount. And we'll dive into a lot of the specifics, our history later. But yeah, handing it over to GMX to do a quick intro on GMX.
GMX is a perpetuals and spot exchange on Arbitrum, focused on just creating deep liquidity, decentralized markets for people to trade, hedge, and perform any other associated function. And I guess I'm CoinFlip Canada. I deal with partnerships and ecosystem development.
Hi, so I'm Saitama from Dopex. Dopex essentially is an options exchange, a decentralized trustless options exchange, where users can purchase calls or put options, vanilla call puts options, and also either provide liquidity for them through our SSOVs, which are predetermined strike option bots. And yeah, I do basically content creation and sometimes also a bit of BD.
Yeah, I can go next.
Yeah, go for it.
Hey, so I am Alec. I'm the growth lead at SpareX, and SpareX is the dev shop that built two different open source protocols. that live on Arbitrum today. The first is SpareX USD. It's a 100% on-chain, 100% collateralized stablecoin that pays holders organic auto yield. And the second protocol is Demeter, and that's a no-code liquidity management solution. And both of these products work together to keep DAOs and their users off of centralized exchanges and keep them using decentralized exchanges and decentralized protocols.
Dope. Y2K, if you guys want, you can go next.
Yeah, I'm Crip, one of the founders of Y2K Finance, and essentially what we have is a suite of structured products designed for exotic peg derivatives that allow market participants the ability to robustly hedge or speculate on the risk of a particular pegged asset or basket of pegged assets deviating from the implied market value. And our initial product is Earthquake, which is a two-sided insurance vaults that allows users to either underwrite or take out underwrite the risk or hedge against the risk of a particular stable asset depegging.
Dope. And lastly, let's hit Prepo.
So hey everyone, I'm Xavier Eckel, the founder of Prepio. And so Prepio is a decentralized exchange for pre-public assets. That means you can go long or short on pre-IPO stocks like SpaceX or Stripe, or like pre-IDO tokens like a MetaMask token or like a Zapper token, for example. So, historically, retail investors wouldn't get access to private markets. So what we're trying to do is democratize pre-public investing. So we want to transform a world of financial exclusion into a world of permissionless access.
Awesome. Yeah. So, again, goes without saying, huge lineup we have here today. Again, I think great way to start it off, obviously, with the guest of honor. Bond protocol. If one, a big fish, you can take it. But can you tell us a little more about bond protocol, I should say, and maybe your journey up until today about launching these bond markets on Arbitrum?
Absolutely. So everyone step into a time machine. We're going back to May of 2021. WAGME. Everyone's quitting their jobs to sell NFTs. Around this time, Olympus-style came on the scene with their mission to become the reserve currency of DeFi and crypto. And one of their many innovations was the concept of bonds, by which anyone could provide protocol liquidity, OHM DAI, OHM ETH, or Ether DAI directly into their treasury in return for discounted OHM, which they could 3.3 or later 9.9, and apply it across DeFi. And this bond innovation allowed them to accumulate this massive war chest of protocol owned liquidity that was earning trading fees, but also a war chest of stable assets to stay alive once the market turned into the bear. Fast forward a bit to October, bull market still in rage. Olympus Pro came on the scene. And so what this offered was bonds as a service, Olympus-style bonds as a service, primarily for protocol-owned liquidity. And that operated for about 6 or 8 months, working with over 55 protocols across 5 different chains. But what we realized was that there were some inefficiencies with Olympus Pro. It was slow to onboard partners, it wasn't permissionless, and we were borrowing resources from the DAO. And so what Tex decided to do was spin this off into its own entity. So Bond Protocol is effectively the next evolution of Olympus Pro, bringing bonds as a service on chain with a number of improvements like different types of bonds, a focus more on treasury diversification and stable accumulation to survive the bear, but a number of flexibility improvements that we made, like tokenized bond positions for secondary markets. And we're really excited with the progress we've made over the past 2 months since we launched, but particularly the warm reception we got from the Arbitrum community. This is where the action is. This is where the builders are. And I think everyone within Arbitrum just does a fantastic job of welcoming new partners into the space. And their first answer is, how can I help? Not, oh, we're not interested at this time. So big shout out and thanks to the Arbitrum team, but also all of our awesome partners for helping us start this journey to bring on-chain bonds as a service in the best possible ecosystem that we could have asked for.
Yeah, 100%. And to add on to that, Joey, it looks like roughly 1 year ago, December 13th, 2021 is when we announced the initial Olympus Pro launch on Arbitrum. So excellent timing and really glad to be back.
You guys are bringing tears to my eyes, please. All right, this is way too early into the AMA. So in that case, then can we maybe dive a little bit deeper into that? Like, what are bonds? I guess within the context of bond protocols, the definition, and how do they work?
Yeah, Tex, do you want to tackle this one?
Yeah, definitely. So, Olympus-style bonds essentially allow protocols to issue their governance tokens with a vesting period in exchange for assets, including liquidity, stablecoins, strategic assets. Basically, traditional mechanisms for raising on-chain funds like liquidity mining have a lot of negative externalities, whereas bonds provide a robust incentive mechanism for people to provide liquidity or stablecoins to access governance tokens at a discount with a vesting period. So we have a lot of partners, experimenting with vesting periods across different ranges of time, from as short as 14 days to as long as 9 months, and really just seeing how people price these governance tokens on different time horizons is a really excellent use case for Olympus-style bonds.
Yeah, and one thing to add on there, I think there's elegance in our simplicity. So effectively, our partners can spin up any ERC20 bond market, but the use cases range from acquiring LP tokens so that they can taper down inflationary liquidity mining incentives, to stacking stables to pay contributors and survive the bear, even inverse bonds where you can take in your own token and then actually emit other treasury assets in return, which we'll see a lot more of once things kind of turn a little bit more bullish. But we really want to have folks understand that there's a standard use case for bond markets, but because of our architecture and flexibility, use cases in secondary markets and a lot of big brain stuff like under the hood embedded plays is going to come from Bond Protocol and our partners too.
And I believe we touched on this a bit in the Spirax AMA that we did last week. So shout out to that one. It was recorded, so I believe it's still on Twitter Spaces recordings. But the topic was raised about how this is not dissimilar from a lot of deal flow that VCs get for getting a discount on governance tokens in exchange for some lockup period. So there's a huge design space there for this style of financial derivative.
And for I guess more at a high level for those who may not be as in the weeds, what would you say are like the high level benefits of these bond programs for both bonders and DAOs alike on Arbitrum?
Absolutely. So the DAOs themselves will have ownership of the assets that they intake. And so depending on the use case, they'd be able to acquire liquidity, taper down liquidity mining incentives and inflationary token rewards. They'd be able to take in stables to pay contributors or even invest in growth. Or really any asset that has strategic importance, like an example would be Convex for stablecoin protocols that want to incentivize liquidity and curve gauges. But from the community members, they get to support their favorite projects in their journey for growth, in some cases survival, but generally growth, and actually get their favorite tokens at a discount. And so as we introduce secondary use cases for tokenized bond positions, we anticipate that there's going to be a boom in secondary use cases, but then also adoption of bonds within protocols in Arbitrum as well. But within the context of Arbitrum, bond programs are a great way for new projects that are migrating liquidity to Arbitrum to establish a moat, a war chest of assets, but then also own liquidity as they migrate it from other L2s and other chains as well.
Yeah, no, that's awesome, and I think the main takeaway here is that like obviously this kind of model is very it's very flexible, and I think it's really easy to tailor it to each partner's or each project's use case in this case. So maybe let's actually kind of throw it over here to a coin flip GMX. If you don't mind me asking, like how have you guys used bonds, and what does the current plan look like in terms of kind of bringing bonds to GMX, and maybe you know how it kind of ties into the overall DAO.
Yeah, so our initial efforts with Olympus Pro, which is now Bond Protocol, which we're really happy to be continuing to work with, have been around effectively treasury monetization. As a protocol, as a protocol and as a DAO, our goal has always been towards sort of, you know, kind of reflected in the sort of the the GLP and the products that we've done is, nice, sustainable, time-based activity. We don't think that we're really smart at timing the market and doing anything like that. Our goal is to sort of build. And to that extent, we've worked with Bond Protocol to do sort of ongoing incremental monetization of our development funds so that we're just continuing to build up a runway over time. So I think that was sort of reflective of people saying, prepare for the bear. We've been working with Bond Protocol on that front. We definitely do see a lot of other interesting opportunities. Reverse bonds, I think at the appropriate time will start to become very interesting for protocols like ours and others who have issued. Well, for us, it's called ESGMX, sort of a vestable long-term token that maybe there is going to be maybe a reverse auction process for taking some of those off the market could be very interesting. And I think a lot of other protocols will find compelling use cases. It's really just a matter of the DAO being able to control emissions, but I think in a very regulated and a very transparent fashion.
Great. If you want, maybe we can kick it off to Alex from SpearX's side. How do you guys handle bonds?
Yeah. So at first glance, it's quite similar to the GMX approach. So very high level, if we're looking at diversifying away from our governance token and into
Cutting out a little bit, Alex. I don't know if it's just me.
Is it a little better now?
You're good. Yep.
Yeah, so basically we don't want to sell the VCs. And what this unlocks is the ability to sell small amounts of SPA to committed DeFi users. And we don't have to get in bed with a venture capital firm, which may not have as aligned incentives as some of these deep DeFi users who are acquiring governance tokens in the bear market. But in addition to that, we're already seeing USDS be used as a payment asset. So as Joe mentioned, DAOs can specify which ERC20 token will be used to pay for the governance token. And SpareX, as well as Layer 2 DAO, are accepting USDS as that payment asset. So this really benefits our protocol simply because it will increase the TVL of USDS. And that drives revenue to the SpareX USD protocol. And then in the longer term, we will be using bonds for protocol-owned liquidity. So short-term funding and surviving the bear. Medium term will be increasing USDS TVL, which I can get into more of those benefits later. And then third, we'll be using protocol-owned liquidity.
Love it. Love it. Y2K, what do you guys got in terms of bonds? How are you guys implementing them?
Yeah, it's kind of similar to what we just said. We've kind of just launched our token and launched our product in the last month, and we have a lot more kind of products in our pipeline that we're looking to get audited, and we might need to also onboard more talent in order to help us kind of build out those new products. So we also see bonds as a way of getting token holders like our governance token at a discount that are aligned with us in the long run, and a way of continuing to raise an operational budget and kind of get a more secure runway and have some dry powder in order to continue building throughout the bear.
Great. Prepo.
Yeah, I've been a big believer in like protocol and liquidity since like the Olympus Pro days. I think it's a lot more sustainable than like liquidity mining, and through like different vesting time frames, we can also attract actors who are like long-term aligned rather than short-term aligned. So at Prepio, we'll mainly be using bonds for protocol and liquidity, not just for our PPO token, but also for each of our pre-public markets, because our treasury will be providing the liquidity to those, and it's the token holders who will be directing the liquidity to markets where they want to trade. But the first step of that is getting that liquidity. But we'll also be using it for treasury diversification. So, most DAOs have a treasury predominantly denominated in their own token, which from the perspective of any like portfolio manager would be a very bad idea. So it's really important for us to diversify that treasury among a range of uncorrelated assets, and bonds are a great way to efficiently achieve that as well. So we'll definitely be prioritizing that at Prepio as well.
Awesome. And of course, last but not least, Saitama from Dopex. How do you guys handle bonds?
Yeah. For bonds, I see bonds more like a financial tool, the same way I see options, the same way I see stocks and stuff like that. Because in traditional markets, like bonds are a freaking like huge, like they take a huge part of like the financial system. So if you look like just for example at Olympus Pro, their bonding system is like I think it's like the biggest driver of revenue to their protocols, like their biggest product, right? So I think whoever goes in the future of DeFi, whoever takes a big market of bonds, is going to be a big player in the future. As for Dopex, so basically Dopex, we give bonds right now. The way we do bonds are through we have an NFT that's called Bridgers, and we only provide bonds to them because, like I said, bonds are a tool, and we don't want to provide the bonds at these prices for Dopex. Right now we're in a bear market, so right now we're like that's why we like to have control of the bonds because we can gauge. Okay, we're gonna give out these amounts of emissions of Dopex. They're gonna provide a bit of a runway for our protocol. But right now, since Dopex is like we're set off, where like our runway is pretty big. TZ is like the manager of our TZ, our CEO. He's the manager of our treasury, and like we have like at least like 10 years of runway, so we don't need like the runway. We don't need to like accumulate more. We don't need to accumulate more stables for a bigger runway. So we've decided to only have bonds for bridgers because we wanted to provide them liquidity, but also we wanted to gauge how much we're going to provide. So we give out like a specific amount every month, and it's like a little amount, not too much. When we go in a bigger, let's say we go back in the bull market, then it's time to start like boosting a bit like these bonds, right? So it's all like a little. It's a tool basically that allows you like to gauge like, okay, is it the right time to bond, or is it a bad time to bond? Also, like there's these protocols that have no choice to bond because they have a small runway, so users can take advantage of that on protocols that they see. Okay, I think this protocol has a bright future, so I want to accumulate these tokens at a discounted price. So I'm going to provide them the capital they need to have a bigger runway, right? So that's the way I see bonds right now, and I'm excited for a bond protocol to see what they have to offer in the future. Go ahead, Big.
There's two things that I just want to call out there and double down on that I think are really cool. One of them is that bond programs aren't static; they're dynamic, and so the use cases can evolve, and you can expand and contract bond programs depending on how your token's performing, depending on new product launches, or whether we're in bull or bear. So what we advise protocols to do is start small to gauge demand and then scale up to meet said demand with their programs. But with bond protocol, it's very easy to configure vesting terms, the amount of emissions to the bond program you want. So you can start small, you can start big, you can do big ones like GMX, but it's really flexible and it evolves over time as we collect data. And the other thing too that DopeX and PrePO have done a really good job of is adding additional gates and incentives to the program. So if you take it straight up in a bond program, we don't necessarily have the gating functionality yet, but DopeX has gated their bonds to Diamond Pepe holders to make sure that the bonders are community aligned and making sure that they're only attracting the right folks. And for PrePO, they're incentivizing users with NFTs via Galaxy and other cool growth platforms to drive continued demand for bonders and additional rewards to it as well. So even though you start with a simple bond program, and I'm putting air quotes around simple, you can do a lot of cool things to incorporate it into your communities and incorporate it into like your broader token economics and treasury strategies as it grows and evolves.
If I may add also, on top like like in the future we might also like in the traditional market there's options for bonds, right? So that could be like something we talk about in the future also, or even like we have Atlantics that provide liquidation protection, which is another cool aspect that we can look forward to. Like we could provide like, let's say you guys have leveraged bonds, like let's say a user wants to leverage like 5x his bond. We could provide because right now let's say a bond has like 7 days expiry. you couldn't leverage it, because if there's 7 days of expiry and you get liquidated, that wouldn't work, right? So with liquidation protection from Atlantics, you can have leverage bonds, which is another cool route that could come up in the future.
As soon as you said the word leverage, I'm sure all the degens woke up. Um, so I think it goes without saying that these bonds are obviously very, very beneficial to the projects, building these protocols. But I guess maybe where we can kind of pivot here is like, how does this provide like a win-win situation for both obviously projects, but also the community members participating in these programs? So in this case, can you maybe give an explanation, from the bond team, of course, how do these bond programs work and how they benefit community members as well?
Sure thing. With the DAOs themselves, participants in the bond programs are giving them permanent liquidity and permanent assets that they own that they can use to invest in growth or get costs under control, cover operating expenses, hire more people, launch strategic initiatives. So by bonding, you're effectively investing into the protocols that you're buying a bond from. So you're supporting them from a community perspective and helping them grow. From like an actual how does this benefit me as an individual bonder, you're getting your favorite tokens at a discount that can be claimed upon conclusion of the vesting period. So you're welcome to apply them in any way that they've designed their token economics. So with GMX, you can stake GMX to earn like platform rewards from traders. With DopeX, I mean, you guys have so many giga-brained applications of DPX and RDPX. From PrePO, you're supporting the PrePO platform. From SpareX, SPA has a number of use cases from a governance token standpoint as well. And Y2K is approaching bonds from a really interesting perspective, which we can cover later. But it's effectively helping the protocol, and you're getting some incentives and rewards for doing that as well. Tex, anything to add there?
I think just to reemphasize that the topic of protocol owned liquidity is always an evergreen topic. I think having community provided liquidity is a lot of times transient. There's a lot of ways to game the system, and just calling out that, for example, OlympusDAO to date has earned over $40 million on protocol owned liquidity. I think when a protocol is the most invested in its long term success, having an avenue to acquire robust protocol and liquidity is a huge use case, and one of the biggest ones where we just continually emphasize bonds as a really great win-win use case.
Totally hear that. And I'm not sure if there are any partners here who want to chime in on that, on y'all's perspective on this. Um, but yeah, we'd love to hear it. Or maybe if you want, I might ask you point flip, only because why not?
Hunter, could you ask the question again, please? Sorry.
Yeah, just like how can community members benefit from buying bonds with GMX?
Okay, so buying a GMX bond gives you an opportunity to effectively, two things. One, we've actually seen two types of people buying into the bonding system. One has been, consistent community members who are just looking to acquire and do find an opportunity to buy occasionally for a little bit below market, but to be able for an asset that they intend to hold long term as is. We've also seen situations where some investors just don't actually want to tip their hands that they're accumulating, and they find that accumulating through bond protocol and other is actually, call it a side pocket of the market that's maybe not as viewed. Having said this, I'm suddenly people might start tracking these bond markets a little bit more, but that's been another area that we've found that it's been quite useful. We've been using it, as we said, in a very limited sense, but I think there's a lot more use cases that we will explore over time. Where I think protocols can definitely work with very different tenures, and those different tenures can really bring you a whole range of different users for your token, especially if your token structure is largely liquid. One thing that the SpareX team covered, which actually I didn't capture, and this was actually our very first experience with Bond Protocol, was when we did a token sale of ESGMX, and this was like the first time we'd ever done something where we were sort of raising funds for our development treasury, and it was for the exact same reason, which was we had a lineup of VCs and everybody chasing down to say, give us a deal, give us a private deal. We want to lock up. We'll do all of this. Definitely a problem worth a nice problem to have. But our goal was still that this idea that everything that our protocol had ever done has been community based, and we didn't want to deviate from that. And our very first bond sale was exactly for that reason, that we were able to go and put those bonds out to the community, and it was snapped up entirely by existing community members as opposed to VCs. And that for us really just, it continued to spread our ownership in to the right people. Everybody's the right person, but basically people who were committed to the protocol as users of the protocol. I'm sure over time, what will be very interesting is, whitelists where, like what Dopix has done with their NFTs, but which could be for protocols where people have utilized the protocol, them being able to be whitelisted to enter into bonds, which basically can be, the pre-sale round. So a lot of innovative ideas out there, people who are supporting, new vaults that a protocol is launching, being able to, again, access bonds and participate in the long-term growth of the protocol they believed in. So that's kind of how we've experienced it and how we've thought about it going forward.
Love to hear it, and appreciate you for chiming in there on my demand. Okay. Shout out to CoinFlip for being amazing. Um, Moving on a little bit, and again, I'll throw this one back actually at you guys, Big Fish. Uh, so if there are any DAOs, within, let's say even within this Twitter space, or listening to this after the fact, that want to get started with bond programs, what's the typical approach you guys take for onboarding new partners and more or less ensuring their success from that perspective?
Pretty easy to get started with a bond program. More or less, just join our Discord or send us a message in order to get in touch with us. And what we'll do is a free consultation, just looking at your broader token economics and treasury management strategy. And once we look at that, we can figure out a use case that makes sense. Is your liquidity mining program causing rapid token emissions? Are you getting wrecked by mercenary capital? Great, LP bonds probably make sense. Is your treasury 90% weighted in your native token? Okay, let's think about diversifying that into some stables or ETH. And then once we do that, we figure out what an actual plan would look like and rolling it out. I mentioned this earlier, but starting small just to gauge community sentiment and demand, pretty low risk, and then being able to scale it up into a broader program, something of the scale of like GMX or DopeX as well. Like our partners, PrePO, SpareX, Y2K, they're starting with small programs, and that's totally fine. Like we want to be able to benefit protocols in Arbitrum of really any size or any stage. And we'll shoot you straight if you're trying to configure something that doesn't make sense, whether it's vesting terms or aggressive emissions. Once we gauge some of the data, then we'll give more of a consultative approach on what phase 2, phase 3 of bonds would look like. But with many of our partners, it's really not necessarily hop on, hop off, but as things change, whether it's the markets or their token economics or projects, they can scale up, scale down, change their bond program, relaunch it, call it quits for a little bit. We're seeing a lot of partners that slow down, speed up, stop, come back, and we'll welcome you back with open arms. And with the number of product improvements that we hope to make, we want to make sure that community members holding bond tokens or the actual DAOs in their treasuries are going to have more flexibility, more use cases with us. So it's pretty easy to get started. Just reach out, let us know. And if you want to connect with some of the awesome partners here today, we can, of course, make an intro or provide context on how their programs have been set up.
Love that, by the way. Yeah, definitely a call to action there for any project looking at even in exploring bonds. Definitely, I think worth the connection there. I think just so generally, I think for people again who may or may not be as familiar, I think the concept of bonds is relatively like nascent in DeFi, considering there are, I mean, I guess a lot of things are like this, but there are very many definitions, I guess, that bonds can fall under. But I think maybe what we could do is like go to each partner here. Maybe Dopex kind of starting with you guys. Would love to know like how you guys have approached, I guess pretty much like defining bonds in the context that works for you guys specifically.
Yeah, or just elaborate a little bit more on your point where bonds can be like a massive asset within DeFi, or how it could fit into potentially options in the future. Would love to, double tap that.
Yeah. Um, well, let me try to have two different perspectives. Like let's say if, as a provider, as a protocol, um, as you guys mentioned, you guys are probably gonna have inverse bonds, right? So as a protocol, if you think like, okay, so is my token, do I believe my token's undervalued or overvalued? If it's undervalued, you would you could actually with inverse bonds, you could actually buy back your tokens, right? Let's say for an example, GMX, which has already like a big amount of revenue, they could gauge how much their protocol is undervalued or overvalued, right? For other protocols, like let's say DOPEX, which are still pre-revenue, it's a bit harder for us. Okay, we can say, yeah, okay, we have a 10-year runway. Could we buy back a bit? But let's say we buy back too much, then like imagine like a lot of users start leaving, and then it makes like it makes it like the whole thing crumble, right? You always need that to gauge like how much you need, how much are you gonna uh, how much you need to bond, and how much are you willing to give out as emissions. So it's like you can go both sides. You can actually just like bond, sell your tokens, and receive runway for your protocol, and also buy back your tokens. As for the users on their side, they have to gauge. Okay, so these protocols are giving bonds out, or they're buying back their tokens, and they have to decide. It's like an option. It's like the same thing. It's the same kind of concept. It's a tool, a financial tool. So you have to like also have this strategic mindset. So you got to say, okay, why is this protocol buying back their tokens, or why are they giving out emissions? Sometimes they're also they just want like you mentioned, they want like protocol owned liquidity, which could be a benefit for still can be a benefit for a user, or maybe they just want to have to secure a runway, so they provide more emissions, and they're not trying to trick anything or have anything wrong with it. And you have to decide. Okay, so am I bullish on this protocol on the future? Is it a good investment that I'm making? And if all these check yes, then it could be a good opportunity for you to bond on for these tokens, right? So the same way that let's say you think this token can be overvalued, and the protocol is buying back their token, you could also sell these tokens back, right? So it's all about gauging and have a strategic aspect to it. As for what was the second question? Sorry.
No, I think you answered it just as far as how it ties into options and utility of bonds.
Okay.
Yep.
Okay. Yeah. Exactly. So basically, it's a financial tool, and if everybody wants to play on their way, and as you guys as the protocol, it's very bullish for the bond protocol, because a bond market is huge. Like in the traditional markets, there's treasury bonds from the federal government. There's like bonds for private companies, all kinds of different bonds, and there's a big market for it. You can trade options on bonds. You can just trade bonds. You can have a time bonds like well, what we're doing basically in DeFi right now. There's all kinds of different types of bonds, and if you guys capture like a big portion of this bond market in the future of DeFi as it grows, I think you guys could become like a big protocol, and for sure, like as DopeX, we as the options protocol, it's always nice to have like um, these other financial systems that we can actually have cross together, right, and have these new products built on top of each other.
Yeah, definitely. And I think it's worth mentioning right now that one of the biggest upgrades that we made with Bond Protocol from the Olympus Pro days is actually tokenizing the bond positions. So this actually unlocks all of the use cases like creating options markets with bonds, creating secondary markets, liquidity pools. And I think the future is really bright, and we have a lot to build to really make sure that bonds, both on Ethereum, Arbitrum, are used to their fullest potential by protocols who want to actually issue their governance tokens on different time horizons.
Most definitely. But bonds is a pretty broad concept, and I definitely want to call on Y2K Finance to talk about cat bonds. You're taking a really, really cool approach. So, how are bonds as Y2K defines them?
Yeah, absolutely. So, kind of the way like we think about bonds, it's not really about like we don't not like a on chain, kind of like what you guys are doing. We see our product structured more like cat bonds, as you mentioned, which are TradFi bonds where states or companies can take out essentially an insurance policy against something like a natural disaster, and kind of that allowed us to conceptualize an insurance kind of platform for like stablecoin depegs, right? We start events as we saw like recently with like mem depegging or kind of a little earlier in the year with Luna where it was a lot more exaggerated. These are events that don't happen really often, but kind of once they do happen, there could be kind of like major cascading effects in the ecosystem. So we kind of saw that as we were thinking about how to create an insurance platform around like these different pegged assets, we kind of took the model of cat bonds from TradFi as like a good North Star to create Earthquake, which are two-sided vaults where people can take out an insurance policy on these really rare events. But once those events do happen and a depegging event does happen, kind of they'll be able to get a pretty good payout for their position, and people on the other side are able to get consistent yield from underwriting the risk of events that naturally normally wouldn't happen, but kind of on rare events or on where in rare instances do happen.
Dope. Yeah, and I think as well maybe like a cool angle that I think the bonds can cover is for stablecoin protocol specifically, as you guys Y2K kind of alluded to, in terms of like it helps kind of place them in DAO treasuries in like different ways. Spirax, Alec, for you guys, what are some benefits of USDS in your treasuries, for example?
Yeah, for sure. So, as was mentioned multiple times, we believe bonds will be this really important financial instrument moving forward. Some people call it a money Lego. So, when you start thinking about, what is involved in this money Lego, there are two ERC20 tokens. And at least for DAOs that are looking to diversify their treasury, they're likely going to be selling some of their governance token or any volatile token in their treasury for something like stablecoins. So let me just plead a case for 10, 15 seconds as to why a DAO should use USDS instead of accepting, say, USDC in this bond sale that they might be doing. So first off, it's extremely, extremely secure. We're audited and 100% backed by other trusted stablecoins. So say you are uncertain about the stability of our peg for whatever reason, no problem. You can go redeem your USDS or USDC at the on-chain protocol level at any time. Number two, our stablecoin that is 100% backed uses all of that collateral to generate an organic interest rate for the stablecoin holder. So that means your treasury can earn a native interest rate paid in USDS just by holding it in the treasury. You don't have to have a treasury manager that's going to be executing trades on behalf of your community. And then the third and the final reason is you can actually program this auto yield interest rate to do whatever you would like. So a very cool example that we're already seeing in effect is, using this 10% or 11% auto yield rate to go back and purchase shares from the open market. So that means if a protocol, does a sale where they're actually selling their governance token for USDS, that interest rate can be buying back that token directly from their specified market. So effectively, they're just consistently buying back that token, and this would otherwise just be stable coins sitting in the reserve. So that's the benefit for treasuries. And then when it comes to protocol loan liquidity, seeding against USDS will earn you traditional emissions-based incentives. So we're happy to work with any DAO that might be interested in using USDS for their bond sale.
Awesome. Yeah, no, definitely like all very different and very effective strategies all around, which is really cool to hear. So I guess kind of like probably tying it up here for kind of going to throw it back to you guys at Bond. What's next for you guys from like a product perspective? Like what can the community, I guess, look forward to in terms of your roadmap?
Yeah, great question. So the big thing I think coming up on our roadmap is designing secondary markets for these bond tokens. I think this is going to be a huge unlock so that once people actually purchase a governance token vesting on some time horizon, there is the opportunity to actually trade that position. And there's a couple different ways we can approach this problem, but I think this is going to be a huge unlock for everyone, as well as designing new and interesting types of auction for markets and bond tokens themselves. So there's quite a bit on our roadmap coming up. Stay tuned. I know that a lot of people on Arbitrum will be able to use these products, and I think they'll improve the overall UX as well as the general discounts that people observe on their bond programs.
From the BD perspective, more partnerships. To Tex's point, we want to unlock secondary markets and use cases, which will require very deep integrations with leading Arbitrum protocols that are here today, but who exist in the ecosystem. So we're quite busy trying to ideate what some of those use cases are, but we do want to create new end-to-end complete holistic product solutions that you can only find in Arbitrum and you can only find with all the partners we have here as well.
The grass is greener over here, as they say. Um, in that case, just as like a final call out for everybody here, and we'll start off with Bond, and then I'll call you guys one by one. But like, how can folks get involved in your respective projects, communities, and correspond programs?
Head on over to app.bondprotocol.finance and buy a loved one a bond for Christmas. No one loves bonds more than your loved ones and your waifu here. But yeah, I mean, look at our bond interface, browse the selection that we have, join our community in Discord, follow us on Twitter. The pretty standard, hey, that's how to get in touch with us. But yeah, feel free to send me a DM, whether you're an aspiring BD person, a marketer. We are looking for some marketing help in the near future. We be hiring a little bit. So yeah, hop into the Discord. Let us know what you think. We're going to be refreshing it over the course of the next couple of weeks to add additional activities, incentives, and just all around fun things to the Arbitrum community.
Awesome. Coin flip, GMX, go for it. Just in case. It's just what can people do to get involved in your respective project and bond program? And by the way,
Sorry, I was on mute. Well, in terms of our bond program, we're constantly running our programs with bond protocols. So anytime you're popping in there, happy to take a look. And we're really excited. We'll definitely keep updating as and when we do new programs on that front. Beyond that, GMX, the decentralized platform continues to run. Go to gmx.io and you can connect to our trading platform and also see many of our ecosystem partners, many of whom are on this call, who almost all of whom we're working with for different things as we work together on Arbitrum. And whatever direction the market is moving in, hopefully there's something that you can do on GMX.
Alec from Spearax.
Yeah, so first off, thanks for having me today. It was a blast. And if you want to get involved with SpareX, first off, the Meter protocol is freshly launched and it's live. So if you're a DAO, get yourself some DEX liquidity today over at demeter.sparex.io. If you're a user and you want some passive income with a stable principal, go mint to USDS at app.sparex.io. You can always purchase some bonds directly on Bond Protocol site. And if you're interested in launching your own bond program, we would love to have the conversation around accepting USDS as your treasury reserve asset and either collecting auto yield or using it to buy back shares on the open market. So very exciting time to be involved in Arbitrum, and we're looking forward to building through this bear.
Cripwalk and Bumsy from Y2K.
Yeah, in terms of participating in Y2K, we just released our token yesterday, and we also released our government token via Y2K. And those who are able to lock up our government token by this Friday will be receiving a share of the fees that we've accrued throughout the IFO. About $175,000 will be airdropped to via Y2K lockers next Friday, who are able to lock by this Friday. And to lock you can visit our site, y2k.finance/lock. And you can also hop in our Y2K Finance Discord and follow us on Twitter for updates on when our deposit periods open to take out hedge or underwrite risk for different stablecoins. And in terms of our bond program, we'll also be putting out communications in those mediums when we do roll out our bond. We do launch start our bond program, the bond protocol, which will be happening shortly.
Xavier from PrePO.
Yeah, so the bond program for PrePO is live now on Arbitrum. So you'll easily notice us because we're that protocol experimenting with the 9 months vesting, but we'll explore some other vesting periods as well. And like the bond team mentioned before, everyone who acquires our bonds will also earn a soulbound NFT. And as a bit of an alpha leak, this might help you even gain access to our guided launch. So make sure to check it out. And to stay updated on our launch, make sure to check out the PrePO Discord and follow PrePO_IO on Twitter. And I'll wrap up by saying we're really excited to be joining this gang of awesome DeFi projects on Arbitrum.
And of course, Saitama from Dopex.
Okay, so if you guys want to come check out Dopex to trade options, you guys can find us on Twitter, Dopex_IO. That's going to be a link to the website, dopex.io, in the description. Yeah, and basically we have soon we're launching a new product, which a lot of people have been waiting for since forever, which is Atlantic Protection. It's in collaboration with GMX. By the way, GMX, congratulations! You guys, your market cap, everything, your liquidity, everything went insane. So congratulations on that point. And we're happy to bring a product on that front that collaborates with GMX, which it's a new DeFi primitive where you can actually leverage on the GMX and you can have no liquidation price, so liquidation free through options. Yeah, so go check that out. And bond, yeah, I'm basically gonna buy a bond for my girlfriend. She's gonna be excited for that.
I'm sure if I did that, she'd.
Everybody loves bonding.
Yeah, that would work out in my favor if I did the same thing. Real quick, just want to give kind of last notes here. Also, Ron, if you guys want to, you can end it off too. But I just wanted to thank obviously everyone, Bond specifically in this case for choosing Arbitrum as their home. All the projects on this space for making Arbitrum essentially what it is today. Really, when I say Arbitrum wouldn't be what it is today in terms of how big we've become as a community. It truly is. It's really mostly you guys, in my perspective, and that includes, of course, the rest of the projects that aren't on the space that continue to build on Arbitrum every day. So, just want to give from our perspective, our appreciation to every last one of you guys for continuing to build, especially through this bear. And that being said, we can end the space. Thank you guys for coming on, and we'll catch you on the next one.
Thanks so much. Thanks, everyone.
Thanks, guys.
Thank you,
Cheers.
everyone.
Thanks, guys. Thanks, everyone. We really bonded here.